Hello, traders. It's E from MarketWizards.com. About 3:30 on Thursday, the first day of February 2024. Reminding traders to use risk capital you can afford to lose. All right, let's take a look at a couple of charts side by side. These are two-day charts, the ES obviously and the NQ. Got the scene of the crime was 13 and a half over here in the ES. Been able to take that out. Been keeping an eye on that today. Also like the idea of 48.75 as support. Called that early this morning with a few traders that I talk with. I thought first objective would be to try to hold, and assuming that yesterday's low was in, then try to get to the 49.02s. Obviously, the next target would be the 49.11 to 13s, and then if you could stretch, get to the 920 target. Likely get paid there at that level, and then obviously on a buyback in the middle, if we can hold at 02 area, then we can do the retest failure leg. And as it turns out, there was no failure. It came up and took that out and is squeezing up, trying to get to this level right here at 29 to 30. So this is where timing gets dicey for those traders who are being squeezed. Do you want to put on any more risk as a long right now, or in fact, are you pressing it? I'm not an aggressive trader by nature where I'm going to chase it at this hour. And the same thing here. I like the idea of being paid at the 428 target in the ES, and that I saw as a yearly level. We've got a pivot at 441 and a half, and anything above that is gravy. And I thought that the potential target today could be to this 66 to 451, although much lower odds than say getting to this 420 to 430 area. So this is a squeeze trade, and anybody that's still in it, good for you. Happy to sit on the sidelines and not punch away all day long. Take a look at perhaps one more chart. And this is the chart that I use for system pivots. Yesterday it suggested 226 could get hit, that I would consider that supportive. This 187 is the big support right now, and obviously just below that the last year's high. So for now, we're still stretching. We are still at a very strong pullback, about 510 points. I had suggested yesterday, and I felt today that anybody who'd missed a big down day would try a little bit too hard. Psychology day, I call it. Whack-a-mole, where it looks like we can break down and keep on going, but the idea that we held here to 65s this morning suggested that then the major pivot was this 43.75 to 52, which is the middle of the two-day spread. And then if we could get above that and take out the highs at 421, 418 target, big idea that I had today, try to take out this 422s if we could, to then stretch and get up into this neck of the woods. And this is obviously harder and on a squeeze type trade than the meat of the trade, which was back here. And so I felt this morning this 285, if it could hold, that would be a very key area to hold today. And then try to do this rotation in this box, which I like. And then this would be the juice up here, these couple levels, and obviously up here too if you get there. So that's the and so this 61 is our next pivot on the NQ. Let's take a quick look at the ES as well. All right, here's our ES. So we're looking at box 7, right? We count them by boxes: 1, 2, 3, 4, 5, 6, 7, 8. And right now we are in box 7. Market trying to hold the 20 and then stretch up into that 29 to 30 area. Getting late. Anybody who's still long, good luck. Looking at the pivot structure, support is actually back here, 48, 43.75. Yes, they were able to hold the top of this box, 63s. And obviously, this is the most important box right here. This is typically where we consider to be the fair value. And then this is the extreme in these top two boxes. So there's actually, with indexes, better odds shorting the top two boxes rather than right here at the 21s. And that's played out in spades. So one of the things I'm looking at for tomorrow, we've had an inside day. Let's see what they do overnight. Protect profits, as Pax likes to say, capital preservation. And I'm going to keep taking it one day at a time. One last chart that I'd like to show that caught my eye this morning and kept me a little bit more bullish than bearish. And this is the yearly chart. This was the idea this morning. I'd said that I think we're coming into some support on a moving average. And that was this line right here that I saw. This is last year's high. I've got it marked so I remember. And this was the reason for that 420 I like to get paid by today. Figuring above that was the good fortune part. So we've had a nice pullback. But first day of the month, I thought this might be better odds for the buy today if we could hold on to yesterday's low. If we broke that, then I thought it could be dicey and come back in this direction. But as it turned out, once we got into lunch, it just kept squeezing higher and higher and hurting all those who felt today had to be a down day because of yesterday's news. So very important chart. I'm going to keep an eye on this relationship. Obviously, these two boxes. So 428 going forward, it will still be an important idea. And let's see. Let's take a look one more. Okay, and this is basically the model, the system model. Here was our breakout back here, identified. Here was last year's high identified. This 187.50 is a very important support right now, and obviously the 17,500 idea. So this range right now, obviously 343 pivot to the 500. Got denominations in between it, obviously. And then up here, if we get above 500, we're back into this frame. So for now, all we know is we've had a good size bounce against yesterday's push, and we're trying to find resistance, assuming support is found right now as of yesterday's low until that breaks. So this is the box that we need to keep our eye on based on the daily chart. Hope that shows you a little bit more about our system and what we look at. Just trying to figure things out like the next guy and taking one day at a time, one trade at a time. E for MarketWizards.com. Hope you have a great day and make sure you honor your stops. It's a tough business, as Anthony Crudelli said yesterday. This business is hard. I certainly agree with that. But I do think it's a business that gets easier as we get a little more experience. You kind of understand all the traps, not all the traps, but most of them, after you get caught in them a few times. All right, be well, everybody.